Welcome to Markets Now. I'm Michelle Rook along with Mike Miner with Professional Ag Marketing. Livestock futures all to the plus side today. We've been a little bit more mixed over in the grains with corn and soybeans, seeing a little bit of a pullback here after the big run that we've had recently. Wheat trying to hold on to gains. And Mike, let's talk about this grain trade first of all. A little setback here today after we got above some pretty key technical objectives yesterday. Weather hasn't changed, so what's the pullback about?
A little bit of profit taking. We've ran really strong on this, and we've been trading a lot of the similar news. Had a chance to trade the Russia Ukraine news. Not a whole lot changing there recently. I think the major change today would be some of the lower offered wheat out of Russia. That could offer a little bit of resistance today to these grain prices, but nonetheless, their narrative isn't changing a whole lot. They still seem to be raising tensions between the two countries. And it seems like they're out of the deal for good as of now, anyway. So that'll keep supporting these grain prices longer term. And then, when it comes to weather, like you talked about earlier, there wasn't a ton of changes so far here recently. So we've traded a couple of those things, put a lot of support behind this grain market recently. And now, really, we're just looking at the forecast to see what's going to show us over the next couple weeks.
Yeah. Is there a little hedge pressure as well here, Mike? Just because, like I said, we've had a $3 rally off the lows in November beans.
Yeah, there has been some hedge pressure here. Saw quite a bit of it yesterday. We really saw it after we pulled back off those highs. So we did see some then. And going into maybe not this rally, but even the one before it, elevator books were quite light in the countryside as well. So we hadn't seen a whole lot of hedge pressure prior to those two events. So I think there is still some grain that needs to get covered before this new crop marketing year, which at the middle to end of July, I don't know how many more chances we're going to get to do that. So it'll be interesting to see how many farmers take advantage of this late marketing rally, anyways.
Yeah. And sometimes weather rallies can be fleeting. So we just have to kind of keep that in mind, right?
Yeah, definitely. And, when we look at it, maybe part of the resistance today was in due to the GFS model showing maybe a little bit more rainfall. That's not quite as accurate. It hasn't proven to be so, especially recently. The EU model has been a lot more accurate. That's still showing pretty dry conditions. So, looking forward on these grains and this weather rally, I'm really going to be looking at the radar and then the EU weather model, specifically over the central Illinois part. I mean, if it rains in Chicago, that'll probably put a damper on these grain prices, I would assume.
Yeah. And the drought monitor this morning did show that Illinois, as you talk about, has really seen a decrease in that drought area there. We also had pretty poor corn exports this morning, though, too, didn't we?
Yeah, they were okay. It's this time of the year, so what's to be expected at this point?
Okay.
I'm going to look mainly towards China at this point and see how active they are as buyers. With the Russia-Ukraine tensions now rising again, I'm looking for China to try to step in and buy from America and Brazil a little bit more aggressively here going forward. So I want to see some action out of them for sure. But otherwise, I mean, Mexico was really your only other player this morning.
Yeah, China was buying a lot of Ukrainian corn before the corridor got shut down here. So we'll see how that bears out. Let's move over to the cattle market. Some more contract highs over in the live cattle futures. Certainly, there's been anticipation of some better cash trade this week. We haven't necessarily seen full evidence of that, though, yet, have we, Mike?
Not a ton. I wouldn't be surprised if cash was steady to a little bit lower this week, even, and maybe it's just the fact that cash just isn't moving as much as futures wants to, anyways. And basis has been narrowing up a little bit here, but the market's really strong. When it comes down to it, choice has been down lately on the product side. Packer margins are weakening here a little bit, so I think that's going to keep somewhat of a ceiling on this market in the short term. It's going to be a little bit of resistance, but the market's been solid. And I think the cattle on feed report tomorrow is going to show you that yet again. They're expecting decently low marketings and they're expecting decently low placements as well compared to a year ago. So I think supply situation, we're still in a very good spot. Longer term here, there's obviously the concerns about demand, which we'll have to address down the road, but it would appear that consumer confidence is looking pretty good today. This idea of a soft landing seems to be more relevant today than maybe a couple months ago. We'll see how the markets handle this next rate hike that we're going to have this next week or so. But right now, it seems like demand is becoming less of a question mark, I think.
And really, demand on an export front, we saw much better exports this morning. I would assume some of that might be because of this recent pullback that we have seen here in the dollar, right?
Yeah, the recent pullback in the dollar is going to play a big part on our exports, I think, globally for pretty much all of our commodities. And on cattle, I'm still more concerned about with as high of prices as we have in the United States. I'm really curious to see what imports are going to continue to look like moving forward and try to keep that somewhat in line.
Okay, that's a good point. I want to go back to the cash trade. I know the North, we haven't seen much cash trade here, and the North has been able to kind of hold out. They've had a lot of leverage. And last week we saw, that cash trade higher way at the end of the week because we have the reports tomorrow. Is it possible, everybody just might wait until then and we could see that leverage be kind of borne out again this week?
Yeah, and typically that's a good sign when you've got a lot of trade at the end of the week like that, and guys holding out. So we definitely have some question marks. The last couple haven't been quite as friendly as maybe some of the prior ones, but also seems like we come around Monday morning and we kind of forget about the cattle on feed report, anyways. So yeah, you'll see maybe a little bit
Yeah.
more action on the cash side, I think, at the end of tomorrow.
Gotcha. Hogs, got can't talk here. August had a gap higher opening this morning. We pushed above the $100 mark today, and cash trade doesn't seem like it's slowing down, Mike.
No, it really hot hog market right now, which is a fun thing to say. August back above $100, so that's awesome. Nearby fundamentals in the cash market have both been pretty solid, so that's kind of leading the way on this charge. And this market, we'll see. It's in more of a prove it to me attitude right now. The front months are looking okay; they're rallying really strong. The back months still have a little bit more of maybe poor demand discounted further out there. So we'll see if we can get some of those back months to rally up with these front months. But right now, I don't think we see quite as much strength in those deferred months.
Do you think though demand near term has, domestically has improved here?
A little bit. I think it's more of the idea that we've been watching. Is it pre buying ahead of Prop 12 deadline on July 2nd? Was that the case? Or are we actually in a situation where demand is holding its own? And the further we get from the beginning of July and we hold at these levels, that's going to be a really good sign for demand. So we've just been impatiently waiting, as July has gone on here and we get further from that date. If we can continue to hold cutout at this 110 or 115 area, that's going to be a really good sign. To get it to run much further than this is going to be pretty difficult from a seasonal aspect, as we do typically start to take a little bit of a hit now. So,
Yeah, but technically, if we get the August contract back above the recent highs, we could run a little farther, don't you think?
yeah, a little bit. I think it'll be somewhat limited, but I think we've got some decent fundamentals, decent charts right now, decent momentum to get us a little bit more in the meantime. But I'm probably not going to ask the world of it at this point. I'm really just asking the back months to try to increase a little bit.
Well, it has been a pretty good rally, though, I would say, off the contract close. All right.
Yeah.
Thanks for joining us, Mike Miner with Professional Ag Marketing. That's Markets Now.